Good morning, ladies and gentlemen. This is Butch Sharrock, Options University. It's Monday, June 10th, 2013, and access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. And we're not a service that tells you what to trade. We're not implying or guaranteeing any profit. And as always, do not trade with money that you cannot afford to lose. Well, we finally got back to that upbeat, and we had a very, very nice week as we look at the Dow. That is for you bulls. We look at the Dow, we look at the NASDAQ, we look at the S&P 500, we look at the Russell 2000, and what kind of numbers do we see? Positive numbers straight across the board. Almost up 1% on the Dow, leading us up through. Up 0.4% on the NASDAQ, up 0.8% on the S&P 500, and for the Russell, up 0.4%, giving us year-to-date numbers respectively of 16.4%, 14.9% out of the NASDAQ. S&P gave us 15.2%, and finally the Russell up 16.3%. Remember, watch that Russell many times will lead us up and lead us down. And finally, let's see what's coming as we go into the next week, looking at economic announcements, and we see that as we look at Monday, we've got very little happening, nothing there to really move the market. Then on Tuesday, we see that we're basically in the same kind of situation. First 2 days of the week, really relatively mild as expectations out of economic announcements causing the market to move. The same thing can be said for Wednesday, as there's very little happening. And then finally, we get to the end of the week where we can see things that numbers really will mean something. Jobless claims were excellent last week, and we'll see how they look at 8:30 on Thursday morning, June 13th. Import and export prices, retail prices, these are things that we'll also see before the market at that 8:30 witching hour. And then looking at business inventories, we'll see that on Thursday, June 13th at 10 o'clock. And then finally on Friday, we see PPI could move the market. We see industrial production and consumer sentiment just before that 10 o'clock hour. So as we can see, as all economic announcements, unless there is some surprise of any real importance to us, will not occur till the end of the week. So the market at the beginning of the week will be able to go whatever way the market decides to go. And we don't have any big moving announcements coming until we get to the end of the week. Now let's take a look at last week and see what our overall trend is and where is this SPX going. We know that we had positive numbers for the week, and look at that. We talked about the fact that it could go back to that 50-day moving average. That's exactly where it went. And it hit there on Thursday and had a nice bounce in the afternoons as it showed us that that was our level of support at that 50-day moving average. So we were in a down cycle, and now what we're in is a totally up cycle in the market. It's always, uptrend in the market. It's been that since last year. We see us going back to the 50-day moving average there. Didn't quite make it there. 50-day moving average there. Didn't quite make it there in April. And we see we had this nice run from April 15th all the way to our high, which took place, and this is an all-time high in the market, in mid-May. And then we had what do we call a healthy pullback. And after that healthy pullback, what do? We hit that 50-day moving average. We're bouncing back up. All right, let's take a look at the week with a little more detail, and when we do that, we'll see that we had that down cycle that occurred from right around May 23rd, somewhere in that range, 24th, and we see that we just kept pulling back to that 30-day moving average, broke through that, got to the 50-day moving average, and then finally used that as our same level of support that we'd used many times when you looked at the bigger chart. And then we had a big rally in the afternoon, a huge range day when it hit 1598, and then bounced back up. We're now currently above that 30-day moving average, and of course we're in an up cycle and an uptrending market. So for those of you that are bulls out there, all is looking rosy. What does the Dow look like relative to the SPX? Well, we certainly had a nice day in the Dow on Friday, up 1.38%, and we see that the Dow is sitting at 15,200 and headed back for that previous high that we had that was a double top, and we'll see if we'll break through that. Dow did exactly what the S&P did when it's pulled back to the 50-day moving average, and then continued on, up Thursday as we got a bounce off that 50-day moving average. So looking at the NASDAQ, let's take a look at the NASDAQ and see what kind of a run we had there. We didn't have a double top in the NASDAQ as it did not get to its previous high, but we had a very nice down cycle, which is healthy for the market. Never made the 50-day moving average, and then on Thursday and Friday showed us that it's up there looking for us maybe some new highs. Looking at the Russell 2000, the one that's our biggest mover for the year, we see that it pulled back, didn't even get close to the 50-day moving average, dipped a little bit below that 30-day moving average, and now is headed back up. Have some resistance up there. Again, that previous high was not reached, so we'll see whether it's got the resiliency to approach that previous high. Next, looking at the VIX, what would we expect to see happen in a downtrend? Well, of course, we'd expect to be a little more punch out of the VIX, and we expect it to go up. Let's take a look and see if that's what it did. Oh, yeah, there we are, and got up to just above that previous high, which is what we were predicting for the VIX, and now we see the VIX pulling back, and we expect that it'll end up back down and around that 12.5%, as there doesn't seem to be a great deal of fear in today's market. All right, and finally, let's take a look at some of our ETFs to see what some of our sectors in the market did, and if we saw the market pulling back, we expect that bonds should pop up. Well, let's see if that's what we got. Looking at our ETF, our TLT, which is our ETF for the bonds, we see that we had very little run on the bonds. The bonds seem to be depressed. It's in a downtrend, and we can expect lower lows out of the bond as we begin to head a little bit higher. And what about our safe haven? Well, it also showed us how much real fear there was in the market as we got very little rise out of gold as we had that pullback. There was no great onslaught to move into that safe haven. And so with that thought, that's our, let's take a look and see what kind of volume we had as we hit that bottom this past week. And we'll look at the spider, and we see that we were having a pullback, having a pullback in the week. And look at those levels of volume. And then look what happened when we started moving back up. Same greater levels of volume as we are here in the month of June, showing a good deal of strength. Not quite the same volume in the spider that we had back in April, but darn good volume, matching coming close to May. And so we're in the summer doldrums, but the summer doldrums aren't exactly very doldrum as we see the market doing what markets do, showing good strength this summer, more strength than we usually see out of the summer, and we've not had our pullback of any great depth, which we typically get, that old rule of going away in May. Looking at XLF, our ETF spiders for the financials, we see that we had our pullback, looked just like the S&P, and that is exactly what we'd expect to see out of the financials following the overall market. And then finally, looking at oil, what has oil done in all this? Oil actually led us on up as we've gotten higher highs and higher lows out of oil as it's moving back up into some of the summer prices for those vacations. And finally, that's the market that just took place, and we saw that we had a very good week in the market. Looks like this coming week could be a good week in the market if you are a bull. And your stocks to watch, of course, for those of you that are gold members, stick around and we'll look at what our horsemen did and how they led the market higher, or what exactly they did do. And so for those of you that are not gold members, if you'd like to see more free videos from Options University, go to www.optionsuniversity.com/free gold. And there we are. This is Butch Shorrock. It's June 10th, 2013. We are in a bullish market, and it looks like things are going to continue on up. And so, ladies and gentlemen, thank you for being here. Butch Shorrock, Options University.